Hi, this 3-minute video will give you tips to help you get started with VAT and tax when you start your own business. Firstly, think about whether you will be a sole trader or a limited company. Both of these options come with different benefits, so evaluate your options carefully. Get help from an accountant at this stage if you need extra guidance. A sole trader will have fewer hoops to jump through, and setting up will be cheaper than a limited company. The benefits of being a sole trader include ease of setting up and less costs compared with a limited company. There are also fewer legal formalities. A limited company, on the other hand, will have more access to capital than a sole trader. They will also have limited liability and more tax savings. Opening a business bank account is a crucial part of getting started, so don't leave this until later. You will also need to register with HMRC. Limited companies will need to register with Companies House in addition to this. Whether you are a sole trader or a limited company, keeping up-to-date records is very important. HMRC routinely conducts random inspections, so make sure these are up to date. Try using web-based accounting bookkeeping software. They are relatively cheap and allow you and your accountant to keep up to date. You will need to register for VAT if your sales are greater than £77,000 annually. If your sales don't exceed £77,000, then it may still be worth registering for VAT so that you can take advantage of the flat rate VAT scheme. What this means is that you can charge your customers VAT at 20%, but only pay HMRC a portion of this, allowing you to keep the rest for yourself. Whether you are a sole trader or a limited company, you will need to submit tax via the pay-as-you-earn system collected by you, the employer, from your employees on behalf of the government. You will also need to collect national insurance contributions. There are different rates and rules for both of these. If in doubt, contact an accountant for help with your payroll. Limited companies will have to pay corporation tax. If you are a limited company, then consider paying yourself a dividend as well as salary. The greater the proportion of your income paid out as a dividend, the better, as dividends do not attract employers' national insurance. If you are a sole trader, then you will need to submit a self-assessment. Your bank accounts will form part of that assessment. If you are the director of a limited company, you too will need to prepare a self-assessment. There are many key dates to remember, most of which are annual. Our case study here on BizCrowd has more information on VAT obligations and deadlines. For more information, or if you would like accounting services, visit our website at broadleafaccounting.com.